Well, I think as it looks, stock went up, stock went down a little bit. It seems like they priced it relatively well. I think what's going on, people have to make up their mind whether they want to live in the past or, the present. And that's obviously, numbers have been challenging for Aston Martin for a very long time, or whether they buy into the dream, which, as I'm hearing, the CEO has presented very well to investors.
Yeah, oh no, Mr. Palmer's done a very good job, hasn't he? But look, let's be honest about it. I have always been surprised at Ferrari's valuation, how it became a luxury good rather than an automobile valuation as well. You and George and the team have been less surprised, I think, as well. You appreciate the value of the mark far more than I do because you know far more about it. But Aston Martin's benchmark is to get to operating margins and to try and get to valuations similar to the Prancing Horse, similar to Ferrari as well. Can they do it, sir?
Well, that's the issue here. Ferrari has done a really fantastic job. Positioning the brand with luxury good investors, delivering earnings, beating expectations, launching supercars, special editions at very high average selling prices. Now that's the reason why Ferrari is selling at an average price of 290,000 euros versus, Aston Martin, which is more like 140, 150. So obviously the plan that is being sold to investors is based on an avalanche of new product, of special editions to lift profitability to a similar level. And if you bake that plan into the valuation that is being priced today, then Aston Martin is actually coming at a 20-30% discount to Ferrari. So it's really about the question, can they deliver what they haven't ever delivered, right, in the coming 4 to 5 years to justify the current valuation? I think there is a good chance because it's a fantastic brand, but there's a lot of execution risk, there's a lot of market risk. The company's over-benchmarked or over-indexed the UK market. Yeah. Whatever happens here
the car
will be important.
It's also different too this time around, isn't it? I mean, we've all seen good product launches in the past and change of direction for automakers, which have gotten them back in the game. But is this time different in the sense that electric vehicles are coming very quickly? You've got lots of car sharing taking place, and the traditional role of the car in the driveway has changed a little bit for consumers.
Now, I think there are two things that are very different today versus the past. First, people are willing to spend a lot on luxury goods. And you can price whether it's supercars or super watches or super handbags at levels that were unthinkable in the past. The new world paradigms, obviously there's more wealth shifting into a smaller group of people, and those people are willing to spend it. That's the one thing. When you look at the auto industry, and obviously Aston Martin is claiming not to be a car company, but to be a luxury goods company or even a Hermes, then I think they have a good chance to be in that pocket. In terms of innovation, they have a strong partner to help them innovate on the engines. That's Mercedes-AMG, greatest engines or some of the greatest engines on the planet. They will need help on electrification. They're a small company, so I think that's a question mark there. And also connectivity and all the other big buzzwords, autonomous in the industry, which I think will become a challenge.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.